Blockbuster tech IPOs in late 2011, such as Groupon and Zynga, have sparked a renewed confidence in the US IPO market, which bodes well for 2012. That's according to a recent report by PricewaterhouseCoopers. The most eye-catching tech offering of 2012 has to be Facebook. The listing will reportedly value the company at more than $100 billion. But investors will be looking for better returns this year than they saw at some of the widely anticipated tech offerings in 2011. And some companies might be tempted to delay planned flotations as long as market volatility remains elevated. But with such a large listing on the horizon, is 2012 going to be the year of the tech IPO?
There will be a whole run of little wannabes and mini Facebooks, but more importantly, if we look broader at the tech landscape, we're also in a bit of a shift in terms of the value that tech brings and indeed the types of companies that are out there using technology. So we're seeing, let's say, from a Facebook perspective, the growth of social media. Around that, we've also got a new generation of gaming type companies. So for example, we had Zynga in the US last year. We've also got analytics companies.
While there were several big tech flotations in 2011 from LinkedIn to Groupon, life after the IPO hasn't always been successful. Back in December, Zynga, the company responsible for Facebook games like Cityville and Mafia Wars, held its IPO. It managed to raise $1 billion in a stock market debut that initially valued the company at $8 billion. But since then, its shares have fallen back significantly.
I question whether the aftermarket performance of these names necessarily lived up to the initial hype, and that's probably a function of valuation. But we'll see. Ultimately these are good quality businesses in many respects that will grow into their valuations, and that ultimately is the key test. Can they actually deliver on the estimates that were projected at the time of the transaction? Ultimately, you can't have a tech IPO market that is completely desynchronized from what's going on in the underlying industry and the underlying economy. So I think certainly for the next 6 months, while the market finds its feet, there's going to be some uncertainty over how many IPOs can get done.
The IPO market for industries outside of technology was much weaker in 2011 than it was in 2010, but that wasn't the case with technology. And recent data from PwC suggests 2012 could be a hot year for the tech IPO market. The average deal size of a tech IPO during the fourth quarter of 2011 was almost triple the average deal size in the same period in 2010.
There is a degree of optimism, and the fourth quarter in the US was much stronger than we'd seen here in Europe. So the confidence they're taking into the first part of 2012 is somewhat higher. If you just look at Facebook in isolation, where they're looking to raise something of the order of $10 billion, if you read the press correctly. The last major technology IPO that size was Google. That raised $2 billion. A few years back. So Facebook is 5 times the size of that, and with a valuation of $80 to $100 billion, clearly huge. But I do think that the market's going to test out the sort of the strategy and the business profile of these businesses, given the performance of some of the other, what I'll call B2C type technology stocks that have come to market, who relatively have underperformed relative to their peers.
Investors, of course, won't be taking anything for granted. Some shareholders at the formerly hot IPOs of last year will be looking at the value of their stock today with some regret. And returns will be far from a sure thing as long as the uncertainty surrounding the Eurozone debt crisis continues. But with several high-profile listings looming, 2012 could be set to be the hottest year the tech sector has seen for some time. Daniel Garahan, Financial Times, London.